Welcome back to another Couch Chat with a CSE financial expert. Today we are here with John Ring, who is one of our mortgage loan officers, and more importantly, a mortgage expert. So, John, thanks for being with us today. We'll try to educate some people about the mortgage process. It's a question or questions that come up quite often from members, especially about the mortgage process, which is very different than other loans that a lot of our members have gotten used to. So
Sure.
we'll just kind of hop into this if that's all right with you.
Yep.
So in the mortgage process, you have always kind of identified for us three key elements in the process of getting a pre-approval for the mortgage loan application. Those three things are credit, down payment, and income. You've always kind of said that the credit is the foundation of the loan. Can you explain to us a little bit what credit does for a mortgage loan and why members should care about their credit?
The credit score is but one factor when we evaluate the credit profile. Mortgage underwriters look at the score, but just as importantly, they look at what's going on in the credit profile for the last 1 and 2 years. Specifically, the last year is most important. So the credit score minimums, different lenders have different standards, but generally speaking, ours is 620, whether you're getting a conventional loan or an FHA loan.
Okay.
But it's more, I always say it's more than the score. It's easy to have a 700 credit score with one credit card and 3 payments that you've made. They got a credit card 3 months ago and you've got a fabulous credit score. You're not going to get a mortgage loan with that, what we call a very thin credit profile. So what we advise people is not only correct problems to fix your score, in other words, pay your bills on time and do everything that you need to do, and I know you've had a previous video series on credit, but also making sure that it's substantive, that you've got 3 trade lines with 12 months worth of history, more or less. That's really what the mortgage underwriters are looking for, other than being above that minimum credit score.
So based on your last answer, credit is, for many of us, just a 3-digit number. You know, some people have a 600 and some people have an 800, and that, you know, you don't think of everything that goes into the profile to make up that number. So you alluded to a thin credit profile and some other stuff in your last answer. What specifically can you explain about the mix of credit and how that goes into just the mortgage process and how that all ties in?
Right. Well, first thing, it's important to know that almost all mortgage lenders are going to pull from all 3 of the credit bureaus. We have 3 credit bureaus in the United States: TransUnion, Experian, and Equifax. Mortgage lenders pull from all 3, and they're going to give you what we call a hard hit. And so when you look at your Credit Karma or whatever you're using, some credit card companies offer credit profiles, that score is going to be different. And the reasons are, number one, it might only be 1 of the 3 or 2 of the 3. Again, we're going to look at all 3 of the bureaus, and we're going to be doing what we call a hard hit. When you're applying for a loan, they are doing what they call a hard hit. So that in itself pulls that score down slightly. And it's hard to say, there's no set formula for how many points does it pull it down. 8 points, 5 points, 10, 15. We think it's somewhere in there, but it can vary. Credit scoring is unique to the individual. So there's no set chart of certain actions that you can take, although credit companies are starting to offer analysis to tell you how to boost your score, and we offer such a service. But the other thing I will tell you is that mortgage credit scores are different and unique from other scores that you'll see, such as a consumer score. Credit card companies and auto loans companies, or lenders I should say, pull different scores. So you might see a TransUnion or an Experian score with your auto lender or even a credit card, and it's going to be different from what we're going to see when we pull that mortgage, because I emphasize it's a mortgage score or recipe, if you will. So it's a different scoring model, and you've got that hard hit, and we're pulling from all 3. So those are 3 big factors that will vary, that will cause variation between what you see perhaps in Credit Karma or what you saw last week on your credit card statement or when you applied for something.
That's a good point, and I guess I hadn't thought about the enhanced score. So we have members regularly that will come in and think that, I got an auto loan last week and my score was 700, but looking at that a mortgage process, it might be different because of that combined score. And,
Correct.
And like you said, with the auto loans, especially if you go through another lender or a car dealer or something like that, they'll look at what is called an enhanced score that specifically focuses on one area. So I'm glad you brought those points up, and certainly good things to look at. So you guys are looking at the full credit profile combined from all of those bureaus.
Yeah, usually we take what we call the middle score. So
Okay.
it's not unusual to see a 30, 40, 50, or even higher variation between all three of those scores. We throw out the high and throw out the low, and we take that middle score. So somebody might have a 599, a 650, and a 680. We're going to go with that 650,
Okay.
whatever that middle score is. And then if we have two borrowers, it's important to know this. It's different in the mortgage world. It's sort of the opposite of what we do in the auto loan world, where we go with the lower of the two middle scores. So if you have a husband and a wife, or two people jointly borrowing together on a home, on a mortgage, we're going to pull 3 scores on each individual. And we are going to go with the lower of the 2 scores for the purpose of decisioning alone, but also that may impact the interest rate and, of course, the underwriting decision.
Interesting. Well, good stuff. All this being just about the credit, the foundation of that mortgage process. So join us for another video where we talk about the other 2 factors. And John, thanks for being with us.
Sure, thank you.
Awesome.